Now, DLF is one, stock that we're looking at this morning. Very strong bookings coming in for their new product launch, Privana. Q1, went up almost 214%. Privana clocked in 5,600 crores of new bookings. And of course, this is the luxury real estate space, which has been doing extremely well. Ashok Tyagi, the MD and CFO of DLF, joins us now to talk about that. Mr. Tyagi, good morning. Things are only getting better and better for the luxury or the premium real estate sector. So great to see that. But I just wanted to understand from you, is this project Privana entirely sold now? What is the quarterly run rate that we're looking at from here? And any other big launches that you have planned for the rest of the fiscal?
Okay, so good morning, Sonia. So, Privana is a bigger ecosystem, and I think almost encompassing 116 odd acres. Right now, what's been launched in Privana, and I'm talking of the launches made in December last year and in April this year. Broadly, 40% of the total Privana FSI has been offered for sale, and that has been sold 100%. We will at some stage, maybe towards the later part of this year, maybe around Q4, get the next phase of Privana or a similar product, in which is broadly a product in the 7 to 8 crore sort of price range. So there should be one more round of this product or a similar product in Q4. We have a launch, the point on launches. We have a launch coming up in Goa, hopefully this quarter if all approvals go through. And we should have at least the soft launch of what we call the Lux 5 or Camellias 2, basically the next super luxury project on Golf Course Road. Again, hopefully early part of next quarter. And Mumbai should also happen, I think, in the December/January timeframe. So I think by the end of this year, we'll have these 4 major launches. And of course, smaller launches in terms of a couple of launches in Chandigarh and possibly a small commercial plot launch in Gurgaon.
So, Camellias 2, how much will it contribute to your sales in this fiscal? You're expecting to launch it in Q3, I assume.
Yeah.
I think the sales potential was 25,000 crores, but in this year, how much could you recognize?
So look, taking and of course the Camellias experience may not necessarily hold, because the Camellias unfortunately did overlap the entire sales cycle with those 2 or 3 extremely poor years. But we expect that the Camellias 2 overall sales cycle of the 25,000 crores should be approximately, hopefully, a 4-year sales cycle, everything else being fine. This year, in all fairness, in the 17,000 crore guidance, Sonia, we have kept only a small portion of Camellias 2. So let's see how that pans out. But right now, our plan for for this Lux 5, as we call it right now in the working title, our number will be in the range of 3,000 to 4,000 crores is what we are looking right now. But let's see how the traction is. And again, this will have to be a very calibrated sale, because you are talking to a very discerning set of customers.
Mr. Tyagi, hi, morning. So just a quick point on prices themselves, and we'll go micro again, but slight macro. The prices have done so well, right? I'm talking about real estate prices, and it's in pockets like Gurgaon. I'm not talking about DLF in particular, because you're on one end of this sort of premium segment, and you said, discerning set of customers, etc. But the price appreciation and the activity we've seen, the transaction activity we've seen, many have pointed out that especially the Gurgaon market perhaps is kind of becoming a little too frothy and speculative. I just wanted you to respond to that. The percentage of end users are going down, percentage of sort of, brokers and investors, that is rising. I just wanted you to address it, sir. You'll have the best view.
Okay. On a lighter vein, I tell the analysts also that people in Mumbai just can't seem to reconcile that Gurgaon is doing so well. Having said that, I don't think it's frothy, really. But yes, okay. So let's come to the serious question on pricing. Look, the pricing in the secondary market and the pricing across most established players, as long as their location, their infrastructure are strong, are definitely on the upswing. I don't think there's a out on that. Whether that will start sort of becoming more plateauing at some stage. I think at some stage, obviously, the pace of growth will begin slowing down, but that doesn't seem to be happening right now. We launched Arbor in about 15 to 16 months back. Then we launched Privana, which we had thought, would be a slightly farther location, almost at the same price point as Arbor. And the Privana 2 location, the Privana 2 launch was also at a price point slightly premium to Privana 1. And the market seemed to be holding. To your point about this, investor wala piece, I mean, in all fairness, the only hard data point that I have is that in the stuff that we have sold in the last, I'd say, 3 years, the requests for transfers or secondary trades that we have got is actually very minuscule. So people are clearly holding on to the projects that they have purchased in. I'm sure at some stage, some people may want to book profits, but this is not those frothy 2008 days where you book a project, pay 10 lakh rupees, and then in 6 months you swing it by for making a 10 lakhs profit on 10 lakh rupees. One more thing, Prashant, as I mentioned, I think on my last interaction with you also, is that we have now, to reduce this froth further, we have upped the booking amount to 50 lakh rupees for normal Privana products. Obviously, for the Lux 5, it will be significantly higher. But the conventional 10 lakhs booking amount hota tha, we have now moved to the 50 lakhs booking amount to honestly filter out the non-serious speculators. And we continue with that entire thing of one allotment per PAN card. So I think clearly, I mean, obviously 100% of the buyers are not end users, but I don't think there are any short-term speculators here. There are people like the NRIs who now contribute almost a quarter of our total customer base on these new launches, who I think are taking it for a medium to long term. And I think that's what we are seeing right now. So right now, to sum it up, I don't think we are seeing necessarily a softening in prices, but we are trying our best to avoid the blind speculators. The last thing about the Gurgaon market is that, say, unlike Mumbai and all,
Sorry, go on. Please finish.
So, I mean, I think in Gurgaon specifically, the number of credible suppliers offering products is also reduced significantly, compared to what it was in the early 2010s. We are now a fraction of those, so it's only a few of the credible players who are really offering this stuff out there. So, extra demand has bumped, and the credible suppliers have sort of shrunk, is what I'll say.
But you are at the margin. You are saying maybe some softness should be expected. I mean, the pace of appreciation should perhaps going forward. You're not seeing it now, but it can happen. Is what you're?
Yeah. So look, if you take the Gurgaon price movement, say in a 10-year cycle, actually the CAGR will be very in the 10-11% point. But there was a 6-year time when actually there was virtually no movement. So in the last 4 years, there's been like a bottled up movement. I think at some stage it will start slightly becoming moderate. But I think, even today, it's not that it's 30% a year or something. It's still in the possibly the 10 to early teens.
And again,
it's selective.
Yeah. The point about Mumbai analysts not being able to, the Mumbai analysts all hold stocks in Gurgaon real estate companies, so I think they are participating in the upside. On a lighter note. Oh, sorry. Go on.
Mr. Tyagi, just wanted to ask you one question. In this recently concluded budget, there's a big debate whether you're in Mumbai or in Gurgaon or any part of the country, whether or not this pulling out of indexation and lowering of LTCG, what kind of impact it can have on the real estate market. I wanted your comment.
Okay, so Nigel, this is frankly, I think I was on your sister Hindi channel the day after the budget also explaining this to Anuj and team. My view is that whatever maths we have done, and this back of the, and I'm not commenting on the series of tweets that the income tax department has issued out. But I think we believe that if your property was brought in the last maybe 8 to 9 years cycle, and if in the 9 years sort of if it's gone up by 2.5-ish times, I think you are okay to marginally better in the new regime. If it was actually an old property which has say gone up 20x or something, then obviously you would be hit slightly by the newer scheme because of the indexation. Look, on the maths of it, you can't fault the taxman for two things. A, he has reduced the entire rack rate from 20% to 12.5%, which I think you will agree is favorably compares with almost any of the long-term capital gains in the world. B, it has made the entire process simpler going forward. Otherwise, everybody used to keep on thinking indexation. Everybody will try to push the transaction from 31st March to 1st April so that they can get one more year of indexation benefit and all of those things. I think it's a move towards what the FM has been saying for the last couple of years, of lower tax, more moderate tax rates and simpler tax regime with limited exemptions. Yes, I think thoda bahut, there will be some individual cases who will feel let down by this in the short term, but I think the market, frankly, is reasonably robust enough to be able to take it in its stride.
Don't you think for new sales, Mr. Tyagi, and this is, there was a lot of discussion, for new sales, 12.5% instead of 20% actually helps in the minds of anybody who wants to purchase?
No. Look. If you were to sort of split the constituencies, I think for the organized builders this is a positive. If at all it's a matter of concern, it's for select wealth managers whose clients may actually shell out slightly more tax in the short term. But actually, because second issue kya hai, ki without indexation now, frankly, the only credible method of sort of avoiding long-term capital gains if you're selling a property is to reinvest back in the new property, and so that you can avail of the 10 crores exemption. So in that sense, this is also a positive for at least the organized real estate for sure.
Just to come back to specifics, the Tardio project with Uptown, is there an update that you want to give us?
No. So as you know, I mean, it's gone into a huge legal battle with Uptown. So there are multiple forums in which we are currently engaged in. So let's see how it goes out. But I think clearly it has gone. I mean, we feel that the way it spanned out was not the best way, frankly, and it's now gone, unfortunately, into a huge legal battle between Uptown and us. Yeah.
All right. Thank you very much. Appreciate you joining in, and good speaking with you, Mr. Tyagi. And we'll chat again. But that's a good update.